Stocks set to stage a small rebound this morning. Can they maintain it through the day? That's coming up on 3 Minutes on Markets and Money. Yesterday morning, we said that markets were set to open a bit higher, but after just a couple of days of selling, that it was likely the markets could finish lower by the end of the day, and that's exactly what happened. We did violate now the 20-day moving average, and stocks did sell off some more yesterday, but again, not markedly so. Markets just really kind of traded sideways yesterday. This morning, we're going to make another attempt here to get a little bit of a rally. 4160 is going to be the new resistance level. That's right where the 20-day moving average is. And not only that, though, we also now have resistance at that level going back here to these previous tops that we saw back in late May, early June, and these bottoms that we had back in March, right as Russia invaded Ukraine. So now there's a good level of resistance that was support that the markets broke through. And at the same time we broke through that support, which is now going to be resistance, we did also trigger that MACD sell signal, which we now have kind of a confirmed sell signal there. Market's not likely to be able to rally strong enough at this point to reverse that signal anytime soon. If we get through the end of the week with this sell signal in place, that will suggest that we are going to see more kind of weakness in markets, more downward pressure on prices over the next period of time as that works through a bigger correction process. So what that suggests really is that markets may not go up much. We could consolidate or go lower will be the most likely projection for prices based on that sell signal. Markets are oversold enough right now. We had a very, very sharp reversal in oversold conditions just over a couple of days of selling. We went from very overbought to very oversold. Oversold conditions can last for a little bit longer here. We're starting to see money flows really kind of come down here a bit, starting to see a reversal of some of that positive bullish sentiment. That's okay. Breadth has been very narrow, though, on the rally going up. Apple, Microsoft, Tesla, Meta made up about 30% of that entire advance. So breadth has been fairly narrow on that advance. And again, the sell-off has been just as swift here over the last couple of days, reversing that overbought condition. So again, we have enough of an oversold condition that we could elicit a little bit of a bounce here. Again, that 4160 20-day moving average, that's going to be initial resistance that if the markets are going to try to hold on here and potentially move higher, we've got to get back above those levels. If not, we're going to potentially test this 50-day moving average, which will be right around 4,000 by the time we get there. That's your range, 4160 to 4,000. That's our range for right now that we're watching very closely. And what happens here over the next couple of weeks as we head into the Jackson Hole Summit, as we discussed yesterday, is going to really kind of dictate how markets trade here over the next few weeks. Of course, September, typically a weaker month of the year. That'll potentially set, if we do get a decent correction here, by the way, that would set us up for that traditional kind of end of the year stronger period, October, November, December, where stocks tend to perform a bit better. So again, be a little bit risk conservative here, hold a little bit more cash. Don't take on a lot of aggressive bets until we kind of work through this period. Really what we're looking for here is for this MACD signal to get back to some level of kind of oversold, where we start to get a turn there, get that buy signal. That'll be a good entry point to add exposure to portfolios. So just be a little bit patient here. No real rush. Kind of watch where you're taking risk. And we'll see you back here tomorrow for the next edition of 3 Minutes on Markets and Money.